Hey everyone, this is Reddick here. So I get asked this question all the time. Should I use a target date fund or build my own portfolio? And here's what might surprise you. The answer has nothing to do with which one performs better, but can deliver nearly identical returns. The real difference? It comes down to investor behavior, taxes, and your specific situation. Let me explain. First, what's a target date fund? It's basically investing on autopilot. You pick a fund based on when you're retiring, like a 2050 fund, if you're retiring around 2050, and it automatically maintains broad diversification, rebalances regularly, and gradually reduces risk as you get closer to retirement. So basically you set it and forget it when you get a target date fund. Now here's the thing. Research from Vanguard, Morningstar, and Fidelity shows that properly executed do-it-yourself portfolios and low-cost target date funds deliver basically the same long-term returns. So if your performance is equal, what's the difference? Well, that's human behavior, and that is huge. Studies show that the average investor underperforms the market by 3 to 4% annually because of poor timing, panic selling, and choosing hot investments. That behavioral gap destroys your wealth. Target date fund investors capture about 85 to 95% of market returns. So often, do-it-yourself investors only get about 60 to 75. Why? Because the automation removes the emotion from the equation. Target date funds make perfect sense if you're saving in a workplace retirement plan like a 401k or 403b and want simplicity. Someone who might make emotional decisions during market crashes in the accumulation phase, steadily building wealth for retirement is a great use of target date funds. This automatic rebalancing protects you from yourself. When markets crash, the funds keep working. Many do-it-yourself investors panic and sell at the bottom. But target date funds aren't for everyone. Here's when you should skip them. First, if you're retired or already close to retirement, target date funds are more designed for the accumulation phase, not the withdrawals. In retirement, you need control over which accounts you tap from for tax efficiency and how you coordinate Social Security and pensions. Second, if you have substantial taxable investments in regular brokerage accounts, target date funds are tax inefficient for regular brokerage because you can't control when gains are realized or taxes are harvested. So they're not great for a taxable brokerage account. They're more meant for retirement accounts. If you're managing multiple account types, like traditional IRAs, Roth IRAs, 401ks, and taxable accounts, a custom approach lets you place growth investments in Roth accounts, bonds in traditional accounts, and tax-efficient funds in taxable accounts. Target date funds can't optimize across accounts like that. And fourth, if you have a pension, standard target funds assume you have no guaranteed income. But if you're a teacher with a pension or a federal employee with FERS, that guaranteed income acts as your bond allocation. You may be able to afford more growth. One more critical point, cost. Low-cost target date funds from Vanguard, Fidelity, and Schwab charge about 0.06 to 0.15 annually in expense ratios, which are totally reasonable. But you can also find active target funds with expenses of 0.4 to 0.75, which can cost you hundreds of thousands over your career. Always check the expense ratio for the target funds and go with target index funds. Anything above 0.2 probably is too expensive. So here's the bottom line. The biggest threat for your investment success isn't panicking in the wrong portfolio. It's making emotional decisions at the wrong time. Target funds solve the emotional problem. Custom portfolios solve the optimization problem. Choose based on which problem is bigger for you. If you need help figuring out which approach fits your situation, check out the link in the description below. And if this was helpful, hit that subscribe button for more content in my newsletter designed specifically for educators and public servants. Thank you for watching.